Fenton.
Witten. Happy Friday.
Happy Friday, my
Yay,
friend.
we made it.
Yay. We made it. We made it to the end of the year. Well, yeah, I think we made it, but our intro didn't. It's been playing up, folks. So maybe you didn't hear it very well, but I think next year we'll have a new intro. Andy, that's what we're looking for.
Yep. One with the right music.
Absolutely. Well, there's a few people here, so good to see you guys. Thanks for stopping by for the last Wine of Wisdom for the year, Andy.
The very last, lucky last. Can you believe it?
Yeah. Well, there you go. We're on the light wine. I'm on a rosé. Nice rosé.
Mate, I've got the just down the road at Yabby Lake, the Pinot Gris 2018. Very, very nice. And I'm doing it in your style, mate. It's been open for 3 days, and it's still good. So happy days.
3 days old as well. Like white doesn't go off. You just keep it in the fridge. Well, there's Deanne. Deanne is a connoisseur of red wines. So there you go. Yeah, Candace was going to say, what is Andy drinking? It's a little bit, lightweight, maybe is the right political word. But mate, happy Friday to you. Good to see you guys. Mate. Good to see a few of you folks in there. Teresa, good to see you. Candace, yes. We might give Andy a bit of cheek about his drinking. Because he gives me plenty, that's for sure. So, g'day, Deanne. Well, welcome to our last Wine of Wisdom, folks, for the year. We thought we might do, a little bit of a wrap up for the end of the year and sort of see what transpired. What Candace is giving us cheek, but she's on the iced tea or the iced latte. So there you go.
Just building up the stamina for the night ahead.
That's it. You got to preload. And good morning to you. Oh, good afternoon, Chris and Kat. Great to see you guys stopping by. If you're new, say hello. Tell us you're new. If you didn't already know, Wealth, Wine and Wisdom, Andy Fenton over there, extraordinaire in the world of the share market, finance, financial planning, and me, Jason, in the world of real estate. We've known each other for quite a while, Andy, and we've been helping our respective communities for, probably almost 2 years now. I think we're getting close to ticking into 2 years in this way. Friday afternoons, debriefing the week, because, folks, as you guys know, the media aren't interested in providing you with accurate information that is good for your wealth creation. They're good at fear and ignorance, and, and that's what sells, unfortunately. But for all of us as property investors and share investors and portfolio builders and, planning your financial future, we need to ignore the media hype and pick our way through the right information. So that's what Andy and I attempt to do on Fridays, just to debrief the week for everyone, business owners, property investors in general. So that's what Wealth, Wine and Wisdom is all about. And hello to Ashley. Great to see you. Hey, Sharon is an awesome coach. Yes. Did you know, Ashley, that Sharon was my client? So I've coached Sharon for many years, and now she retired. She actually retired from using real estate and investing to retire herself. She got bored. She was retired for a few years, got bored, and now she's coaching. And now she's coaching you, Ashley, and many others. She's a great coach. She's an awesome lady. So welcome, Ashley. Good to see you. And there you go. Tash Thompson. Hope everything's all good in your neck of the woods, Tash. Hey, you're allowed out now, Tash. You and Andy can travel. So anyway, the Victorians are allowed out, and you're allowed into Queensland. I think now, soon. Anyway, yep, it's on.
Wow.
Like Donkey Kong. I think anyway. It could be soon, could be now. Deanne probably knows if she's still listening. Deanne, tell us when the Victorians can come to Queensland.
But we used to be all over this, didn't we? And then we just kind of thought, well, we're probably never ever going to see each other again face to face. So 1 a.m. Monday. There
1 a.m. Monday, folks.
All right. Be on a plane by 12 o'clock.
Fenton's on his way. Fenton's on his way. Andy can come visit. Absolutely. Yep. Andy's coming to visit. Well, Tasha's saying it's peak wedding season, and she's booming. So that's great to hear. That's fantastic. But as we do, folks,
it'll be like the last time I came up to Queensland, mate, where I came up to actually visit you, remember? And I flew into Gold Coast. They said, you're not allowed to be here. And I've gone, well, that's inconvenient because I'm here. There's no flights out of here that you can actually book on. And the guy's gone, oh, you're going to have to jump into a cab and promise me that you go over the New South Wales border.
Like Andy said, oh, yeah, mate, no problem. No problem. Trust me, I'm a real estate agent. Trust me.
My uncle's a lawyer.
Yeah.
And I'm training to be a politician.
That's it. No, well, there you go. 1 a.m., mate. We can officially hang out in sunny Queensland. Looks like it's a bit better weather in Melbourne, to be honest. But there you go. Yep. Alexis, good to see you here as we do it. So, folks, what do we do? What happens in Wealth, Wine and Wisdom? What we do, we debrief the week. You guys know a few of these things. If you've been here once or twice before, what's in the news? What we might do, Andy and I thought we might do a little bit of what's in the news, but also a little bit of a recap on the year. I've got a few maybe a little bit of I told you so's and bits and pieces. Not too many, but I think that's kind of good. Things you should know. We might get around to that tonight. I know there's one or two things that will always pop up. And as always, if you have a question, any question in any way, shape, or form, whack it in the chat. And let's see if we can get around to having a bit of a yarn about that in one way, shape, or form. And there's Michelle. Hey, Michelle. Good to see you. Fantastic. Well, let's do it, Andy. Maybe you want to give it a boot, give it a kickoff. If you've got Andy's got a new computer, folks, and hopefully he knows his way around it by now.
Well, we'll see, mate. There's nothing like just going straight in with zero preparation, but we're pretty good in this tech space. So let's see if we can do it. Let's
see what happens. All right. Well, let's put Andy. What's in the news? There we go. Happy days. Dun, dun, dun.
Look at that. And I've even made myself bigger so that I'm more intimidating, Andy.
Domination.
Mate, that's it. So, mate, it's a couple of interesting things. And sorry, gang, we forgot our Christmas hats. We were meant to be really hamming up the Christmas and bringing in some Christmas themes, but anyway, it's a little bit too early for that in the news of finance to talk about Christmas. But Merry Christmas to everybody.
Yes.
Hope all of you are going to have amazing times with your respective loved ones and a very safe and funky year ahead. And when I say funky, I hope it's a good type of funky, not the bad type of funky. But sending love to all of you. So with that, this has got absolutely nothing to do with it. But I thought it's reasonably interesting, very much over in my world, mate. And I've got some crackers for you here today. Let me tell you, some of the stupidity that you're about to listen to is just off the charts. You're going to love it. So more than 70% of investors made switches during March and April. Oh, sorry. More than 70% of the people who made switches, investment switches, during the March and April of 2020 left super balances worse off as a result, as if they simply did nothing at all. So super switches tripled during the pandemic. So what that means is there are a lot of people in industry funds who, when the pandemic hit, they got out of their growth style of investments, right? And they got into something more conservative, thinking that they're doing the right thing, right? So they're ultimately trying to pick the market. So anyway, the facts are in, and this is it, mate. It's super fund members who bailed out of equities at the height of the pandemic could be tens of thousands of dollars worse off, with the new research showing that up to 70% of investment switches made in March and April last year led to poorer financial outcomes. You and I always talk about this. It's not timing the market, it's time in the market.
Timing's the one.
Timing the market, trying to pick the right times. Mate, if anybody out there tells you that they're absolute gangbusters at doing this, if they're not a yacht sailing around the Whitsundays or around the Bahamas or something like that and drinking Cristal through a crystal boot of some sort, then I'd call BS on them. Obviously, there are better and worse times and easier times to make decisions. But anyway, so the key takeaway from this is get advice, stick in the market. And if you don't know what you're doing, don't try and trade in and out of the market. 70%, which means that's the odds on. All right. The majority of people who did it lost money. The analysts of more than 42,000 switching directions by research at Griffith University and the financial services software company Iris, they found that the number of super funds with members who switched their options tripled during COVID-19 pandemic. So people are getting in there and they're playing. But common sense prevails, and let's have a look at where this little rabbit hole I'm going to go down into it.
Where we go. Well, I mean, it really the short term trying to guess which way directions and growth, short term maneuvers, it's not for the faint hearted, Andy. And to be honest, most people get it wrong. Even the professionals get it wrong most of the time, don't they? At the end of the day, we've talked about economists and all this sort of thing. If you're an investor, certainly in real estate world and equities world, if you're buying something, well, just keep it and, ride a good stock for a long time. I don't know if you bought a Buffett stock, Jeff was talking about a Buffett stock, 40 years ago for 10 grand, you're worth, I don't know, there's multi-millions right now. So, that's the interesting thing, isn't it? Stay in line, get in line, stay in line.
Yeah, and look, even if you think that you know what you're talking about, just be cautious with it, because here's the stats. The average bad switch during March and April caused an 18% reduction in a person's balance relative to what they would have had if they hadn't switched. 18%, that's not small bickies, and that's the average. So get good advice, stay in the market, but and be able to ride through the trends, because here's the thing is that markets are like ecosystems, right? They don't just completely melt down, blow up and go away. They evolve, they change, and they come back to balance. And the velocity of time, the velocity of money, the velocity of information means that they actually arbitrage, they correct themselves really, really quickly. Sometimes they can be a bit hot and a bit emotional. And you want to try and avoid that where you can, avoid getting in during those periods of times, but ultimately sticking in the market. But mate, so if you were I was about to say dickhead, but that's you would never be that person. But let's just say you're a politician, Jace, and you saw this, and what would be one of the most stupid things that you could possibly do?
I don't know. Maybe. So, in what context? As in, stop people doing it? If you're a politician, we should legislation.
Spot on the money. Have a look at this Muppet, and I'm sure that the professor is very, very smart. But check this out, for God's sake! Like, talk about the nanny state. Professor Brimble said superannuation industry needs to discuss whether it's become too easy for people to switch investment options. If you think about how often switches happen these days, member can do them on their phone, their website, get access to anything, blah, 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 blah. So basically, he's sort of coming out and proposing that maybe we should bring more regulation so people can't do what they want with their own money when they want to do it.
It's ludicrous.
It's the kind of backwards thinking. And it's like there's a whole lot of people, this, don't you? And everybody, this. Like let us know in the chat if you believe this is happening. There is a whole lot of people who know nothing about this that are all sitting in a room going, "Geez, Professor, that's a bloody good idea. That's a really good idea. Let's literally take the universe of technology and the ability for people to be able to think and feel and do things for themselves, and let's devolve this a few hundred, maybe 1,000 years." And take us back to the Encino days. It's absolutely flaming ridiculous. I couldn't believe it. When I started getting down the article, I'm like, oh, mate, wait until Jace gets a hold of this. But this is the problem. This is one of the big problems in politics these days, is that something happens and this is absurd. And then they go, well, how do we protect people from themselves? And in my world, that's not the job of the government, is not to protect people against themselves. It's to protect the country against, threats from overseas and provide economic prosperity for the country and try and run the country well. And, that is fundamentally their job, not to get involved in people's wealth. And, if they do, mate, just check out this one. Like, if these people should be making wealth decisions, check this out. The Victorian state budget was blown out by nearly $8 billion, with the state now predicting a $15 billion deficit. So do you really want these guys actually controlling your purse strings when they can blow a budget up better than anybody I've ever met? Like, nobody I know can destroy a budget like a politician. Seriously.
No. Well, most of them, Andy, aren't classically trained in any fiscal capacity, are they? I mean, they don't come from, I don't know, accounting backgrounds or whatever it is. Politicians can be, everyday folk, to be honest. And, that's one good thing about our democracy, but also it's a flaw in that system where it comes to, anyone could be a politician, right? And then they're making decisions like really big things. And at the end of the day, educate. You and I are passionate about education. People need to learn about their own well-being, their financial wealth, and it takes time 100%. And effort. If you want to legislate something, legislate that there should be teaching about financial acumen from year bloody one onwards in schools and universities. Come on,
And, it's companies like ours, and it's companies like Net Wealth, which is a company which I love and very close to. And they actively go out and try and do this, so proactive time in the community, trying to educate the younger people, so that we don't have these challenges. But by the time they grow up, they won't be able to do anything with it, because the government will say, hang on, you've made some money, but you can't handle it. So we're going to handle it, and we're going to blow up a budget like by $8 billion each quarter. But yeah, well done in creating that money. We'll manage it, because we've proven that we lose money hand over fist. But, congratulations on your education. I think it's absurd. And I know I'm going to the ridiculous, but this is what we've been seeing in financial markets now ad nauseum.
And, well, Andy, you could probably get a bit more accurate in my commentary here, but isn't Australia one of the largest super/pension systems in the world? Per capita, we punch like a gazillion % above our weight. Like, we've got so much money in our super system in comparison to the rest of the world. The old there's a lot of money, let's angle and wangle to get control of it. It's got to be there, right?
Like, they have ever since it came out, there's been different pollies who have kind of put their Gillard was giving it a fair crack. Like, she definitely had plans to nationalize the scheme, but mate, it doesn't work. Like, they already destroyed. Like, they were the ones who came up with the defined benefit funds. I mean, the defined benefit funds, what an incredible scheme to be a part of. Absolutely. But do you know the biggest? I've already blown it up. What's the biggest debt? What's the biggest debt that the US have?
Yeah, well, it's their schemes like that, isn't it? They have those. Is it to do with the government? Like, anyone attached to the government jobs, that administration, like that world is just out of control.
Yeah. So anybody in the US that has a government job, a lot of them are under defined benefit funds, which basically mean that you get a multiple of your salary. A defined benefit when you retire, and it's on years and time in service and final salary. And they're quite complicated calculations to figure it out. So absurdly complicated that virtually nobody can figure out what they are. Right? So it's an impossible.
Make it complicated so you don't know what's going on.
But here's the thing. So US 29 trillion is their current national debt. That's their current debt, right? But when we look at the US unfunded liabilities, we're at 161 trillion. $161 trillion, worth of future benefits that are going to come on to their balance sheet that need to be paid within the next 20, 30 years. Right?
Holy cannoli, mate.
And this is what happens when governments try and run funds. And so Gillard had her eyes set on it to nationalise the scheme because, as you said, mate, they just look for wherever the cash is. It's like, where's the cash? And they must have listened to us, mate. They must have listened to some of our business presentations, and they've gone, control the cash.
Control the cash. Who controls the cash wins. End of story.
They're speaking to us. So anyway, we better keep that on the down low moving forward. But I thought this was an interesting one here as well, and I forgot to put in the main article. But around 30 asset managers and quant fund managers have been trying out through the retail lens data offerings since September. Now, what that actually means is that they're now looking to social media. They've actually got screens for these things called meme stocks, right? And meme stocks are actually they're stocks that become cult-like following through either social media or other things. So Tesla was kind of like that, but GameStop, which is in there, which just went absolutely berserk, like zero, and people made millions from nothing. AMC Entertainment Holding, again, they call them meme stocks because a lot of the data actually comes, and the cult following comes from social media. So now what these hedge fund managers are doing is they're actually doing social screening in order to start to predict what stocks are going to run like meme stocks. So this is like, oh my God. So these guys have got AI robots now that are going through social media to try and find the velocity of trend that go to various different listed instruments so they can get ahead of the curve when there's negative trash talk, like what our mate Elon Musk does about Dogecoin and Shiba and things like that. If they caught, because they'd put a flag on him, if it tripped him with one of those comments, bang, they'd likely sell out of whatever position they had. Or if he started pumping it up, they'd jump in. So this is an interesting one. The screening tool is a data set on the US retail investor trends sold to institutional clients, right? So it's sourcing information from media platforms such as Reddit or Twitter and Facebook, so on and so forth. The data shared with the clients include the size of retail flows, the most discussed stock on social media, and companies that are likely to face retail squeeze when small investors rush to a stock that a hedge fund is betting against. Right? Apple was identified. This is gold. I mean, I geek out on this stuff significantly. Apple was identified as a top retail favorite on December the 6th. Based on positive sentiment on social media and in-house flow intelligence analyzed by the product. Apple shares are now up 8% so far this week.
Crazy.
As an example.
Yeah.
Like my mind just started blowing when I started reading through these articles, checking out the underlying platforms that are there. We are in a different world because, Jace, you and I have spoken about this a lot, and what's the number one thing that drives markets?
Mate, sentiment, like the people's confidence, right? At the end of the day, if they're not confident, it won't happen. And if they are, it will happen.
And if we strip sentiment further down, we go, well, it's markets are largely emotional in some way, shape, or form.
Yeah.
And so this is almost a way where people are able to tap into the emotion, the publicized emotion on platforms, social platforms, to gain an average consensus across the average to be able to try and get ahead of curves before they start coming. Like, just think about it. It's literally data mining everybody's comments, and if Apple's on the nose, right, they're gonna rip out of Apple. And
it's live. It's live. It's real time. It's real time, right? Yeah, it's real time. And that's, I mean, you and I have talked about this, for 2 years now. The speed of information and data,
astronomical,
and what happens? I mean, I haven't got it in my notes today, but ANZ just launched its new 10-minute loans, right? 10-minute loans. It just made me think, Andy. Wait a minute, 1-minute loans. That's better than 10-minute loans, right?
I've got an idea, Jace. We're going to come out with 1-minute loans.
6-minute abs. But But
10-minute loans.
yeah,
How long does it take? I know that's a silly question, but I've worked with a bank before. So how long does a
it
10-minute loan
doesn't
take?
take 10 minutes, but that's the catch cry, right? So far out. But so it's an interesting one. It's the speed. Like you and I chatted or got a chance to listen to a futurist not so long ago. We mix in the world of a fair few business owners, and I can't. It wasn't Steve Keen. I can't remember his name, but I was reviewing his notes the other day, and he talked about what are these things that are going to, change our worlds so fast. One of them's 5G, and it's not necessarily 5G, but it's what 5G brings, Andy.
Yeah.
It's the speed. Like basically, what they're saying is like a doctor could be in the Philippines doing surgery on someone in Sydney, using the speed of internet, anywhere in the world, and using robots to do the surgery. Like, mind blowing, right? Scrape the sentiment, scrape the emotion of the world of social media, and say, all right, well, which way the market's going to go? That stuff is so cool. Absolutely.
Unbelievable, and a
Yeah.
real sign of where the new tweaks to finance are coming. And when we talk about meme stocks, what I think about is cryptocurrencies as well, because I reckon, but if they're not toying in that already, I reckon they're all over it. I reckon they're running it. They're betting on it at the moment. I reckon they'll be having an absolute game day with that technology in the world of crypto, in the world of NFTs. And mate, if you're not there, but this is literally the Nostradamus of investment. It's really incredible, and definitely one to watch. I'll be watching it very, very closely.
Yeah, well, you and I have said it for a couple of years. It's here to stay. But both you and I were hedging our conversation on it, because we were waiting for one thing, Andy, and
Yes.
that day has arrived, and it was gonna come, right? It was gonna come. There was no, every country in the world is bearing down on this stuff anyway. I mean, there's some serious consequences to the world of social media coming for legislation and management and control, and also crypto. Whether you like it or not, there's some regulation coming, and it's coming all over the world. It's going to be here. Commonwealth Bank said, yeah, you can put it in your Commonwealth Bank wallet, et cetera, et cetera. Michelle's saying, hey, crypto's being advertised on the radio right now. Like it's here, and crazy stuff's going on, Andy. So, there needs to be something go on. My 18-year-old son, and we talk about investing all the time, Callum, and he's like, oh yeah, my mate Bob, the names have been changed to protect the innocent, by the way. But my mate, Bob or Jeff, now he's doing real great in crypto. He's up to 30 grand, like Andy, I don't know about you, mate, but like I wasn't talking about investing when I was 18, like this is crazy, right? And so, every 18-year-old knows about crypto.
Yeah.
Like you and I didn't know about shares or property when we were 18. I mean, shiver me timbers. Like, the average 18-year-old, what we were into, bloody fast cars, having a few drinks and chasing the opposite sex, So,
well, mate, I reckon there's probably an opening for those younger people who want to do that. There's probably a captive market because everyone's talking about investing. But mate, it was inevitable. They had to get a hold of it. Mate, this is going to be one of the themes for next year in Wealth, Wine and Wisdom. And my Nostradamus prediction. Well, we predicted this ages ago, but my prediction is that this is going to give us more laughs as they try and roll this out. I mean, the country can't keep all of its states together, right? Let alone have a single app that works for COVID and tracking of COVID and all of those sorts of things. So Mate, what's going to happen? Are we going to have a Victoria coin and a New South Wales coin, a WA coin, a Queensland coin, a Tassie coin?
Let's bloody hope not, Andy. It's
Oh.
like the railway system in Australia, for crying out loud. Like, they have the same gauge for. I mean, we're the same country. Like, you know.
Mate, it's going to be. It will be the buffoons rollout, mate. Seriously, when it comes to technology, I wouldn't trust these guys to sit the right way on a toilet seat, and they're about to try and launch a currency into Australia, mate. It's going to be an absolute pleasure to watch. And wait until he's up there and he's having to report on what might be a multi-billion-dollar clusterfuck that's just happened, where people have lost a lot of money due to
NBN.
But the difference is people know about this stuff as well. That you're going to have school kids basically saying, "Oh, I told you that was going to happen." Yeah, no, stay away from the government coins.
Yeah,
those government coins are a bag of dog shit.
Mate, it's an interesting one, isn't it? So, you know, that stuff's out there. And here's something else that, you know, we were chatting about a second ago, you know, the cost of Australia's aging population, you know, when it comes to super and underwriting some of our financial risks into the future. You know, Andy, you know, part of our foundational conversation with people is like, hey, the government's not here to look after you when you're old. And, you know, they actually can't even afford it. They can't afford to do it right now. Just so you know, right now, if you're 30, 40, 50, the government has not enough money put aside to look after you. They don't have. And if you don't have some money put aside, then, you know, there's going to be some challenges and some trouble. So, you know, not only America's got some issues there with their big debts, Andy, but so too does Australia. Our taxpayer base needs to increase. I've said this for years, over a decade. And Australia needs 40 million people, not 26 million.
Well, mate, they've got to open the borders for all of that sort of stuff.
It's true. Yeah.
But just as a headline, we're currently sitting at $8 trillion worth of debt here. Now, I can't, in Australia, I cannot find the unfunded liabilities right now, but if you keep on having a bit of a yarn, I may well find it. But it's quite a simple mathematical equation, really, at the end, is that there becomes a time where the amount of debt cannot be paid off without a substantial increase in the revenue.
Yeah.
So that's what's called the debt ceiling, right? And I don't think a lot of people actually understand what the debt ceiling is. That debt ceiling is basically, it's the event that if you were to relate it to a journey in a car, it's when the car has been crumpled up to about 2 foot long because it ran into a brick wall at 200 kilometers an hour, right? It's a bit beyond repair.
Yeah.
That's what the debt ceiling was in the States. So they passed through that. So they, in theory, they're broke. And that unfunded liability section, that just keeps spiraling with the promises that they make, which they'll break in the future anyway. Promise made today is not necessarily a promise.
Well, it doesn't get them elected next time. So that's the issue, Andy, right?
She'll be right, mate. It's only 4 years. I'm only around.
It's someone else's problem if I don't get elected, you know. That's ludicrous.
So, mate, this and there's no. It does not astound me by any stretch of the imagination that they didn't see this coming.
Well, they've been talking about it for a long time. I mean, this has been on the radar. Well, as you know, for at least 20 years since I've been paying attention. You know.
Oh, absolutely. We've been talking about it since I got into it.
Yeah, a little bit late, but you know, there's only one way to deal with it. Like you said, is you got to have enough. You got to have a decent enough taxpayer base, and Australia doesn't have it. We got a massive country. We've got such dispersed expenses and infrastructure. We need more people, and you know, and whether you like to hear it or not, like, you know, someone's going to take my job. You know, get over it, folks. That we won't have an economy in the future if we don't have enough people in the country, and we're getting older and you're not having enough babies. So either get on the job and get busy, right? Or open the borders and let a few people in.
My God, who was that? Which prime minister was that who basically said, "Come on, pull your pants down and do it for Australia"?
Wasn't that Bob Hawke or something? Bob Hawke, one of those mob. He was like, one for the country, like one for you and one for the country or something, wasn't it? Or was it? Anyway, that's funny. Well, I thought I'd do a bit of a wrap up, Andy, on what sort of in my neck of the woods, what kind of transpired for the year, or so. And hey, listen, there was a lot of talk about interest rates in the world of real estate and finance. And to be honest, it's gone sort of nowhere. The variable rate's still pretty low. A few of the lenders adjusted their fixed rate because, hey, that's in their discretion. But there's no movement from the Reserve Bank. They're talking 2024 and beyond. It may be, but hey, for the next couple of years, don't stress. So we're low interest rates are here for a little while. I think they're going to be here for a long time, folks. Sub 5 interest rates are here forever. That's the way I see it. Andy, when you and I mean, my first loan was in 2002, 2001, 2002, and it was 11% for crying out loud, folks. And it was astronomical, but everyone was paying it. That's what you did, right? So anything below 5% interest rate is you're winning, folks. Just so you know, right? So we've got a long way to go before interest rates are untenable in any way, shape, or form across this nation. So I think we're good to roll. So this year, interest rates didn't move. Nothing to Michelle's too old for babies, she said. Sorry, Michelle. Well, someone's got to do it. Anyway, there you go.
Just encourage the kids. Encourage the kids. Jeez. Mate, we won't be allowed back next year.
No, we ban them off of Facebook. But so
Uncle Jason said,
"Come on, you lot." But the interest rates, we're good to roll next year. It was interesting. I was chatting with Sam, my business partner. Andy, you know him, and folks listening, and a few guys know him. He was like going, you can see in the media, nobody's picking on 2022 because it's going to be a cracker, right? They're all talking about 2023 because 2022 is already locked and loaded, folks. Nothing's going to happen, especially in real estate world. We're underwritten right now when it comes to the real estate game, with some pretty interesting convergences in pressures and upswings. So, we're good to roll. But, maybe 2023 and 2024 will be a bit different, but, I don't think so. There's some foundational things that are in place that aren't going to change too quickly. So interest rates are staying. Okay. Let's have a look at what else came home to roost this year. Andy, we have got the lowest average vacancy in Australia we have ever seen in history. So now across almost every capital city of Australia, we are under 2%. Now, Sydney and Melbourne are well on their way. That was October. I know right now that Melbourne just dropped under 3%. It's 2.9. Seriously, like, I'm not kidding you, folks. This is insane vacancy rate. So insane. You wait till like 3 people arrive in any one of those cities and the rents are going to go up $200. Like under 1% vacancy rate, Andy, is like there's nothing to rent. There's nothing. Like there's nothing on the market. It is just ludicrous. In Brisbane, 1.4. That's the lowest vacancy rate we have seen like ever in Brisbane's history. And it's the hottest market right now. And, and Melbourne and Sydney. Melbourne has been beaten to a pulp because of lockdowns. Right. But this is the thing. Like it's still a city of 6 million people, Andy. It popped. Is it 6 million or 5 million? Sorry. What did it pop? Did it pop through 5 million throughout COVID? It's still busted through that 5 million mark in the middle of COVID anyway. Folks, like it didn't like, oh, everyone was leaving Melbourne. Like 25,000 people left, right? And we still cracked through 5 million people in Melbourne. You know, like I don't believe the hype. You know, the media can ham it up a little bit and a few people can march up and down the street and be cranky, which is perfectly fine. But that doesn't take away from the foundational pressures of the real estate game, which means, hey, there's not enough good quality properties to rent. So we have landed, Andy, in the lowest vacancy Australia has ever seen in real estate terms. And actually, you and I talked about this one.
It's a new record.
Yeah. Oh, breaking records everywhere. We're breaking them. We should have a little meme. Usually you've got a meme, a record breaking. But again, hey, listen, 60% increase in industrial land in Melbourne in 2021. I don't know if you knew that.
Mm.
And the lowest vacancy in history of industrial land on the east coast of Australia ever. Another record broken, Andy. Industrial land is like bushgar, right? So there's some crazy stuff going on. We've landed. We're ending the year on a kind of like a whoa. This shit's gonna get crazy. Like we thought last year was crazy. 2022 is like batshit crazy, right? When it comes to the pressure that is building up in the system right now. And when we have a look at a few things, last but not least, the supply chain, it has declined significantly. It's choked hard. What we've seen here, this is an interesting one, Andy. What we've seen is quite a significant, about 60,000 houses come online, which have been stimulated by government free money, right? So not the real market. It is the fake market. And it's an interesting one because the stimulation has come from free cash. These people have entered those markets. So what it was like it's absorbed 2.5 years of supply, 2.5 years of land supply. 60 odd thousand people have left, entered the ownership market. So, which is a good thing for them. They got free money, which is great, and the marketplace, got a bit of kick on and momentum. But now that party's over, the free money's over, and you watch this bar chart like collapse next year because the medium density, like the apartment market, the townhouse market, absolutely like poleaxed, like just gone.
Well, so there's a couple of things that we might see. We might see, and this is what I'm wondering about the industrial side, because industrial property is a very specific type of property, right? And when you think industrial, you've got to think logistical these days, because the last mile theory, 80% of the cost is in the last mile.
Yeah.
And what is it? 70% of statistics are lies, but no, that's it's actually higher.
And 87% of presenters make up statistics on the spot.
I just don't have the slide. It's ballpark. It's around there, right? It's close. But it's if the government are releasing the land for industrial as opposed to what the company or where the companies are going to be wanting them, that's going to be really interesting. And so, it'll be interesting to see whether you've got Google's, Amazon's, some of these big supergiant companies snapping up the lands that's released, or whether they're buying elsewhere. For me, industrial leading indicators are going to be the big companies, right? Because they're the ones who really have their finger on the pulse, and they're the ones who are fighting for that last mile in consumer delivery, so that they can get their products cheaper into your hands and faster, because people are very impatient now. And the velocity of the package to you is going to be a really big focus. And so the government are probably thinking about trains and automobiles, but these companies are thinking about drones and
Drones,
stuff
mate.
like that.
Yep.
Right? So,
Barbecue chicken via the drone, Andy.
Well,
Yep.
the government is still delivering things via stalk. These companies are thinking, and the logistical nature of that. It's then okay. Well, so population areas to airports, traffic, air traffic, boom, all of this stuff is going to start to come into it. And mate, I don't think the government would know jack about it. But anyway, that's because I have very little faith in the government. But
yeah,
I'm interested from a housing supply perspective because this. And I just don't get the rationale behind the decision making by the government to stimulate so aggressively in the building sector, which created its own problem.
they've overdone it. Yeah,
and they've overcooked what was a supply chain shortage. It's like, for God's sake, guys, understand you've locked the borders. The shit's not going to come in, right? You've created a huge amount of friction, and then you've gone thump and created a huge amount of demand. It's like you guys are meant to try and protect us from this sort of stuff, and you're actually accelerating the issue. And then they're coming back and they're going, "Oh, housing prices, we got to back the housing prices."
Yeah, you caused the problem. Yeah, and you're standing there going, "Oh, we got to fix it now." Like, come on now,
I reckon next year, you might see some stupid releases, which will then potentially at some point in time have a completely different effect. And I think that low quality property, and I don't know property, but I think that, the lower end property could get really, really hammered if they do stupid big releases.
It does. It does. We had a bit of that, even if they wanted to wind it up today and say, let's get on with it, folks, we need to fix this. It's a 3 to 5 year time frame for delivery, right? It doesn't matter which way you slice it. It doesn't matter what the government does. They could give the land away for free. It won't be livable for 5 years. It won't be started and developed within 3 years. So, we can't fix the next 3 years, but maybe in 5 years, if the government has any brain, then they might. But I doubt it. I doubt it very much, Andy. But this is the thing. The challenge is this, man. And the point of bringing up that industrial land, the industrial infill development, like industrial to residential infill, what normally happens in a city is the residential pushes the industrial out, and it just gets pushed further away. Like Sydney, it's pushed industrial to Newcastle, right? So you have to go to the end of the freeway to Newcastle, and pushes it to places. So that metric, that financial metric, goes like, oh well, what it's worth is industrial, but compared as a development site, well, a development site's for residential is worth more, industrial is worth less. Well, let's sell it. I'll make a profit. Right now, it's actually worth more as an industrial site than it is a development site. And so that's going to exacerbate this supply chain issue, especially that kind of like infill, that industrial infill around most cities, where you don't want to be, 55 kilometers from the CBD. You want to be 20 kilometers from the CBD, that industrial area that needs to be infilled. It's old. It's 50 years old. That used to be the one that got infilled and developed. It's called urban renewal. Urban renewal now is not cost effective. It's going to take urban renewal apartments from $400,000 to $1 million. And who's going to pay $1 million for a one bedroom? 20K from the CBD doesn't make any sense, right? So, but it will happen. Like I'm telling you right now, somebody will at some point, but not today. Not today. But the psychology of housing, the average house price for $1 million has popped, Andy. And let's go to this one as we go, because, most Australians live in, a couple of pretty significant cities, the East Coast, $1 million houses in Sydney. Nobody bats an eyelid to buy $1 million house. Melbourne, house for $1 million, that's cheap, right? And the talk in Brisbane, Queensland is like $1 million is cheap. Check out Canberra, right? It's $1 million. It's more expensive than Melbourne. And, we've got a couple of, smaller cities that are still in that affordable range. But, let's face it, folks, they're not economically that strong. I mean, Adelaide's kind of, I wouldn't be going there if you can buy somewhere else. But Canberra, Melbourne, Brisbane, they're the top 4, and Perth, it's not bad, but it's still a bit weird. Old Perth, it's a long way away, and economically, it's attached to mining, and mining can be quite volatile in the world of real estate. So it's an interesting one.
Are they still part of Australia, Jay? I thought they left.
Well, they've tried to break away about 1,000 times, Andy. They're like, we've had enough of you lot. We're having a lot, but the point of this one, Andy, is I want to point out the difference here, folks. Where have we ended up? What has 2021 given us? The difference, the largest difference in years. I think it's over 27 years. The largest difference, collective difference, the gap between house pricing and unit pricing. The gap between house pricing and unit pricing. That's where we are. All right. So where's the value?
And how's that measured, mate? Is that like square meterage or
just median pricing? Median, not average. Median. Yep. And obviously that would vary from suburb to suburb. But when you think about this, we have the largest gap between median house price and median apartment price we have seen in over 20 years in Australia's history. And, now if interest rates go up a little bit and people still need to buy and whatever, there's significant value being built into the apartment space. Like my number one pick, folks, is Melbourne every day of the week. It's still very affordable. It's a gold mine, but
we will be back, Jace. We will be back. We can't keep Melbourne down.
You'll make a comeback. But the challenge is a lot of people don't believe it because the yields are so low in Melbourne, right? So the prices are great. The pressure is perfect, but the yields are low. And that's only because Melbourne's been beat up. And let's take a look at the last chart, which is not the vacancy, but the household income. Where did I put that one? Oh, maybe I didn't put it in there. Is it this one? No. Let me see if I can find it for you because it is an excellent one to really round out what we're talking about. I think it's here. Here we go. This one here,
got it,
Andy. So the rent snapshot. You have a look at Melbourne. Every other city has massive positive territory, for 2021, the last 12 months change. And let me integrate that into my Prezzo. If we have a look at, I'll just integrate that into what we're talking about. Let's put it down here. And, if you have a look at Melbourne in here, why I'm like, okay, I'm bullish on Melbourne is because its rental yield has been suppressed, not because it's not fundamentally a great bet. It's just because of the lockdowns in Melbourne. Like the lockdown has affected the property market way more than any other market in Australia. So basically you can purchase in Melbourne in apartment space pretty well. And every other city in Australia has had, almost double-digit growth in both asset classes from a rent point of view, but Melbourne hasn't. And so I believe Melbourne will pop next year and the year after when it comes to rentals. It's miles behind the rest of the country. And so if you're buying today for $600,000 in Melbourne and your rent's $500 a week, I believe it will pop to 600, maybe even 650 within 2 years easily. Like it's this built up demand in that space. So, that's where I've got the pick for the end of the year, Andy. That's where I think we're landed. We've landed at
that's interesting, mate. Just before you go further forward on this, because there's been a few things that have been around about auction clearances and things like that in Melbourne recently, and I know this is on the tips of the tongues of a few of my clients and few of my team members. And so the question is, so they're saying that the market has softened a bit in Melbourne just recently, and the clearing rates are dropping. And I started thinking about it a little bit, and I'd love your take on it. But I was sort of like, you know what, we're coming to the end of 2 years of basic lockdown. So consumer sentiment may be a little bit soft, but I also kind of felt like people's priorities right now is about Christmas, not buying. It's about actually going out and enjoying.
100%.
Because that dynamic. And of course, there's always going to be people who will be looking, but I'm just wondering whether there is, there's sort of that opportunity that's been created because of the timing of this. It's not necessarily a fundamentals based in, but what's your take on it, mate? Because it's a little bit unusual that it sort of softened a bit. And I guess my question is, did it soften? What's your take on the softening of it? Is it that just people don't have faith?
Oh, listen, like 100% we're coming from highs. You can't go from like 90% clearance rate to 95% clearance rate to 98% clearance rate. Like that doesn't work, right? Like, and what has happened is the volume of listings has actually increased as well, right? So there's a little talk about, interest rates going up. There was, probably 2 months ago, there was a little bit of kerfuffle, APRA and whatever. So, call it 100 listings and now there's 200 listings. It wasn't that much, but there was an increase about 30 to 40% of people who wanted to like, oh shit, the market's peaked. I'm getting out. Let's get it done. Right. So then the choice is there. Once you sort of give a bit more choice, people aren't as committed. There's not as much clearance rates. Yep. So number one, the volumes have increased. But by the way, Andy, like from record highs and record lows, do you know what I mean? So kind of like softening in context from what? Like from the record high, there's only one fucking way to go. It's like, 5% down. I mean, there's nothing to worry about, folks, do you know what I mean? So,
100% clearance rates. And then next week it was 98, the largest drop in clearance rates that we've ever seen.
Yeah. In recent history, 6 weeks,
Since our last article 4 hours ago that said the opposite.
Yeah. So, the volume has increased, but not significantly, not in any way, a significant way. And absolutely 100%, I've got business interests in multiple residential real estate agencies, as well as property investment coaching businesses and stuff like that. Mate, we have seen it across the board. Literally, people have switched off in December, and it's usually not the case. Usually it happens, come 20 something of December. But I believe 2 years of like uncertainty, lockdowns, blah, 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 blah. Australia's had a gutful and they're like, fuck it. It's December. I'm out. You know what I mean? And I'm seeing it in the stats in my businesses. We're seeing it in the stats in our inquiries in our properties for sale. And you can see it in the stats for, clearance rates and, all sorts of stuff. So yeah, I think we're going to have a quiet January, but I think we're going to have an insane February, March, April. I think it's just going to go crazy next year until we get to election time. And then there'll be kind of like okay, let's see what's happening. Right. That's what I think. So, interest rates are low.
At least there won't be tax rises. They won't bring in the COVID levy, I won't imagine, next year.
No, well, there's a lot of talk about dropping business tax rates, which I think is very smart, Andy. Like at the end of the day, you and I know that, small businesses are the backbone of this country.
Adam, you put more money into my pocket, mate, in my business, and I will just punch that into talent and resources and
totally. We'll hire more people. We'll make more things happen. Yeah, absolutely.
Well, and by the way, if you're out there and a great advisor or client services officer, we forgot to put the plug out there, but send them my way. If you know any coaches that want to get involved in property, we're deadly serious. Go see Jace and have a chat. We're always keen to find good talent out there. It's shameless promotion coming into Christmas. I don't care. But if you know any client service officers that want to join an incredible team, then I'm definitely on the lookout and for advisors as well. So keep us in mind over Christmas. That would be the most incredible Christmas present you could give us.
Totally. Give us a referral, folks. We're looking for coaches. Positive's looking for coaches. great finance brokers and great property managers. Andy is looking for client services and also financial planners in that space, in that world. So, hey, listen, give us a referral.
Yeah, 100%. And I want to just touch on this, guys, just so that because Jason and I may or may not do impromptus over Christmas. Who knows? We always say that we will, but then don't. But if we do, great. But we're going to leave you alone for a little while over Christmas, and you're going to be in the hands of the media. And that's going to be an interesting place to be. Let's just face it. They're going to try and rock your world in 400 different ways and scare the shit out of you, beat you up, all of those sorts of things. So maybe just as a little bit of a leaving you in comfort. Interest rates, again, we've talked about this a lot. Japan is the only country which we've got where we can look, and they're a modern economy, ladies and gentlemen. They were leading the way until the Asian currency crisis. But down there, you can see before 2000, so it's over 22 years ago now, these guys have not been able to raise their rates off zero. They have been zero for over 22 years now. Now, if Japan can't do it, I'm going to say that Australia is probably a little bit unlikely to do it in the short term. So if you want to just chill out and ignore the inflation data, just take a breath and go, nobody else has ever been able to do it successfully. Do you think Australia's better? And I love Australia. But do you think our politicians are better and are going to be able to do it better? Probably not. You're going to see, most likely, you'll see something like that. And that's what I call an oh fuck moment. That's where they did it. And they went, too soon. And while we're in that zone, time in the market, do I get in? Do I get out? Is it going to be a bad Christmas? Is it going to be a gun Christmas? These are the sorts of questions that people constantly ask. Is Christmas a bad time in investment markets? Well, ladies and gents, this is the Australian market over the last 12 months. This is the ASX 200, 10% average return. That's what we talk about, and that's ultimately what we try and strive for in our Australian equities portfolio. Hasn't shot the lights out. It's just a good year. And when you talk about time in the market, if you try and get out, look at. This is what happened. That was COVID. And then we busted through it and we haven't been back. And as Jace said about the $1 million mark, well, we had the 7,000 jitters.
Yeah.
Right. Just there and there. We had the 7,000 jitters. But once it broke through with a level of comfort, it just powered on through. And so we're seeing sort of new market conditions. I'm not saying that it's going to be a steady ride right the way through. But this is what we're seeing. This is the US market over the last 12 months, gone gangbusters, 27%, just absolutely outstanding. And again, this is COVID, ladies and gentlemen. So if over the course of Christmas, the media just try and just bedazzle you with bullshit or just try and scare the lights out of you just so they can grab your attention. And that's all it is. They're just trying to get your attention. It's like a baby screaming its ass off because it wants attention. So when they do that, and it's not a matter of if, it's a matter of when they do that and they start to try and push you, just go, I remember Anne said that the media are just a bunch of babies. And they're crying louder and louder and louder, trying to get our attention. And then just go back and go, Japan, good country, great country. Did some bad things once upon a time, but most countries have. And I don't mean that's terrible. I don't mean to make light of that, but they've never been able to raise it. I don't think we're going to be seeing anything too soon over here. I think that markets will change, mechanisms will change. The media won't. They're going to stay the same, and they're going to try and get your attention. But just Uncle Andy and Uncle Jason said, just chill out, enjoy Christmas. Don't allow them to just scare the shit out of you. Be happy, be merry, be okay with it, and understand that the world is not going to collapse over the next December, January, no matter what markets do. And there's going to be volatility because people are going to get scared at different points in time. But just chill, drink some eggnog if you're American, and enjoy it. Because I think that you're right, Jace. I think that 2022 is going to be a very, very interesting year on so many different levels, and you just want to come into it with a solid head, solid mind. You want to be relaxed when you come into it so that you can make good decisions rather than allowing the cortisol levels to pump through the system because you're freaking out because the media keep banging on about inflation. And spoiler alert, they're going to have good retail sales over Christmas. It's not inflation; it's just retail sales.
Yeah, it's people have got a bit of coin and they're happy to celebrate Christmas. Yep, no stress. Well, there you go, mate. I think that's a great way to call it done and dusted. But Alison said she's going camping at Lake Weirdo over Christmas, and that's Lake Weirdo is a bit of a play for Sam and his podcast. So enjoy, Alison. Hopefully you come back alive from Lake Weirdo. I'm sure you will.
I'm extremely intrigued. We're going to have to share what this Lake Weirdo is.
I'll tag you on the podcast. But David, thanks, mate. Appreciate you, buddy. And appreciate you giving us a little bit of feedback. We do it because we love it, but also appreciate being appreciated like anyone. It's always nice to get a bit of a shout out every now and then. So folks, I think that's it, Andy. We're done. We're dusted. It's kind of like I feel like I fell over the finish line this year. But it's been it's been an interesting one for sure. But mate, it's been made better hanging out with you each Friday, my friend. That is for sure.
100%, mate. I couldn't have done the second lockdown without you. Couldn't have done the whole of COVID without you, mate. And I think that some of the bombs that you've dropped over the last 12 months have just been absolute cherries for those people who are out there. And including Brandon, probably even got some good tips before he went on his filthy little ways. But but mate, I can absolutely guarantee this, that you've been an asset to me. You've been an asset to the clients. You've been an asset to the people who have been listening to this. And mate, I'm yet to get one of your predictions that are madly out that are wrong. So I've got my eye out for them. But I'm hoping they never come. But mate, thanks for sharing your wisdom. I reckon it was more wisdom than wine over the last 12 months, and it really has, from the bottom of my heart, mate. I love you, and it's been an incredible couple of years. And mate, we'll keep doing it as long as you keep turning up. I'll keep turning up.
Mate, Fridays sound good to me, mate. So, yeah. All right, buddy. Well, appreciate that. Ditto right back at you. And big shout out to you folks. We wouldn't be doing this if it wasn't for you guys.
Thank you.
We love doing what we do because it helps people. And you guys are right at the center, right at the heart of what we do. So appreciate you. Have an awesome break. Have an awesome chill, whatever that might look like for you. And we'll see you guys in early 2022. And we'll do it again with Wealth, Wine and Wisdom. So it's a final for 2021. Good night from him.
And it's a good night from me. Good night, everyone. Merry Christmas.
Merry Christmas, team.